I think that the internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash, a method whereby on the internet you can transfer funds from A to B without A knowing B or B knowing A.
The e-cash or the digital currency has come now and it's autonomous. Bitcoin is the new revolution, it's the future, and it's going to be a very good technology for people to use as a digital currency. So in this presentation, I will show you what is Bitcoin and some of the reasons why I invested in Bitcoin. I purchased some Bitcoins and some risk which are associated with Bitcoin. In the reasons why Bitcoin is increasing in value, I will discuss how it is being used as a counter to hyperinflation and stimulus economy policies of the governments, and how the investors, the institutional investors and companies like Elon Musk, who is the richest man in the world, and why he bought Bitcoin and hold it this year, and other investors like MicroStrategy, Michael Saylor, and other companies are trying to add Bitcoin in their balance sheet. And also the other thing about decentralization, Bitcoin is not controlled by a central authority. There is no intermediary. There is no one who can shut down Bitcoin. There is no central ways of controlling it. Another thing which makes it very valuable and demanding, because people like to be autonomous. There is also the limited supply. There are only 21 million mineable Bitcoins. So when something is more limited in supply, its value automatically increases. That's the rule of economy. And also it's cheap, flexible, and seamless in terms of transacting. You can send even 1 billion using only $3. So it's very, very cheap and very fast in transaction than the traditional ways of sending money, huge money, especially internationally. But also Bitcoin comes with risk. We discuss how loss of private keys can be very risky. You should hold your secret keys very safely and do not lose them. And regulation thing, there is also the impact of regulation and the attention of the government and the central money policies. And also there is volatility. Bitcoin is volatile. Its value can be right now this price. The next moment it drops by 10%. The next moment it rises by 50%. The volatility can be a very risky thing for some investors who do not have long-term goals. So what is Bitcoin? Bitcoin is a crypto. It's a digital currency. It was initiated in 2008 by a pseudo group of developers, and they are called Satoshi Nakamoto. That's not their real name. And the currency has been adopted since that time. The thing that prompted the creation of Bitcoin is that there was a technological revolution in this century, and as you can remember, in 2008, though I was in school, there was an economic crisis, especially in the field of real estate, and it was apparent that the manipulation of the central government towards currency management and other things made a vulnerability in those banking system and other financial institutions. So the invention of a Bitcoin are decentralized. It is a decentralized digital currency. There is no central authority like the fiat currency, which is manipulated by the central bank. There is no single administrator. So this was a peer-to-peer Bitcoin. The inventors were really creative in suggesting ways through which people can exchange value without involving the intermediary, so that the people themselves are the banks. There is no intermediary bank that plays in between that controls the value, but the people themselves they are the ones who form the cyberspace bank. So this system was created in a very intelligent manner, so that there are limited bitcoins, and also the supply is very controlled, and also security is very high, and it's very critical. And the way it was done is through the creation of a public ledger, like in the traditional bank, but this public ledger no one controls, but the transaction is recorded there permanently, and there's nobody who can interfere with that. So it's more transparent than the banks. So in the effort of trying to solve the problem of economic crisis in 2008, these inventors saw an opportunity to make me and you hold your own value, your monetary energy, without involving the intermediaries. So in the blockchain network, one person sends to another person, and the transactions are verified by network nodes through cryptography and recorded in a public distributed ledger called a blockchain. So there's no central control, and no one can kill or destroy Bitcoin because it's decentralized. It's not centralized. And Bitcoin was created, it's usually created through mining, but there are still limitations of mining, of which through the verification, through the approval of transaction, and that adding them to the public blockchain. That's how bitcoins are mined, but there are set numbers of mined bitcoins, and this makes the system very transparent. It makes it uncontrollable, or let's say no one person can control it. There is no one central server that controls the whole network. So no one can destroy Bitcoin by him or herself. No government can destroy it, and it has become a good way of storing value. So in last year, I remember very well, there was this COVID effect, and here in March 2020, as you can see, the US dollar was trading like 100 shillings per US dollar, but as the coronavirus increased and it was announced, you found that our Kenya shillings was being weak against the dollar. You can see how the dollar was gaining power over Kenya shillings, and it was becoming stronger and stronger and stronger, and now it's trading at 109. And this upward, this increase in exchange rate between US to Kenya shillings prompted me to look for ways through which I can hedge against this depreciating value of Kenya shillings. So I decided to save part of my savings and convert it into an asset, and through my analysis, I remember I had some bitcoins in 2016, so I knew the technology was very powerful. So I decided to take Bitcoin, and I bought some Bitcoin at July 27, 2021, last year. These are the transactions of some part of my transaction. These are part of my transactions. Of which I made my first initial investment in bitcoins. I increased my portfolio by purchasing more and more, and I remember I recorded this screenshot where in August 27 the value of one bitcoin was 1.2 million Kenya shillings, and you can see on the right side the value of the same one bitcoin is equals to 6.2 million. You can see that's an increase of around 5 times, and within a period even of less than 1 year, or a difference of 8 months, I think so. And you can see its value has been increasing over the past. So if somebody had bought 1 million worth of Bitcoin last year, today he or she would have 6 million during a period between August and March currently. And so that's how Bitcoin looks like. and that's how its value is. So looking at that chart, coming back to now Bitcoin versus US dollar. So this is the moment whereby when its value was $9,300 dollars per Bitcoin, of which interplays to 900K, 950K somewhere there, and that's where I bought. I remember this day was my first investment in Bitcoin. I bought some portion of the Bitcoins, and still I've been holding that my Bitcoin and increasing more Bitcoin until the current the current value at 56,980 according to the current timestamp, and that has been my way of hedging against depreciating value of Kenya shillings and the effects of coronavirus. Anyway, it's not only Kenya shillings that was affected. Other currencies were still affected because the economy was still affected, and I was looking for ways of hedging against inflation was a good idea, and that prompted me to put part of my savings into Bitcoins and purchasing them and storing them in my local wallet. So it's like a currency. Let's say if you want to see the current value of Bitcoin, the exchange rate of Bitcoin versus Kenya shillings. Bitcoin. This is the exact current value, 6.2 million. If you want to buy a Bitcoin maybe of 0.5, half a Bitcoin you use 3 million. If you want to buy 0.1 Bitcoin, you will use 600,000 shillings. So it's fractional. You can even use fractional parts. You can buy fractional parts of it, and it's just fractional, and you can treat it the way you are exchanging US dollar versus Kenya shillings and other currencies, but it's a digital currency. Out of the 11,284 assets or companies, Bitcoin falls on the 8th position, and it has a market cap of 1.008 trillion. And it has overtaken companies like Visa, Facebook, Tesla, Alibaba, Toyota, MasterCard, etc. There are many of those companies that Bitcoin has already surpassed. And it's almost now surpassing Google or Alphabet market cap, which we can expect in some months to come. Bitcoin comprises of 10% of gold's market cap. And gold market cap is 10.867 trillion, and that of Bitcoin is 1 trillion. So it's around 10% of gold's market cap. If you can look at this comparison, it's apparent that if Bitcoin will equal the market cap of gold, that is it, when it has a market cap of 10 trillion, the same as gold, then we will see mathematical calculation will estimate that 1 million will be the price of 1 Bitcoin. That's around 20 times from the current value. And then we can expect that this should happen in 4 to 10 years from now. So if one speculates 1 million right now buying Bitcoin, and then it increases by 20%, 20 times the current value, that means 1 million will equal to 20 million, provided that all limitations and factors remain constant. So as you can see, these are the top assets by market cap. There are very many, more than 10,000 assets and companies market cap. The first one is gold, and then there is Apple, and the other company, Microsoft, Amazon, Silver, Alphabet, and Bitcoin. From these assets, we have gold and silver as the common traditional assets for storing value, and they have been existing for several years back, and they have been used to store value. During the corona time, you find that silver and gold were demanding as a store of value because of inflation, economy, and other factors. But still, Bitcoin has come to be a new revolution for the same store of value, and it has many advantages. So that's why someday we can see that the market cap of Bitcoin will be equal to 10 trillion. And if it reaches that time, then the value of Bitcoin will be 20 times from the current value. If you can look at the chart of gold versus Bitcoin, gold on its own and Bitcoin on its own. For the past around 1 year, or from January 2020 till now, Bitcoin has only increased, gold has only increased by 13%. Only 13% only, with some pullbacks. As you can see, it has been dropping for several days back. But Bitcoin, the same time, the same counterpart time, from January 2020 to the current time, it has increased more than 663%. It's ridiculous. You can't compare it to gold. So that's why I say one day Bitcoin will overtake gold in market cap, and that will set the value of one Bitcoin to be $1 million US. Taking a look at the chart, you can see that from January January 2020 to the current time is 12.53%, or approximately 13%. The same thing comparing Bitcoin, it's apparent that if you can take a look at the gold graph, this is a monthly graph, that means one candle equals to 1 month. We can see that since January last year, 2020, at this point, to the current value, only 12.12%. If you can approximate it, be 13%. But if you can look at Bitcoin, the same time difference, January till the current price, can see increase more than 650%. If you can draw accurately from this region to this one, more than 650%. So one of the hypotheses of why Bitcoin has increased a large portion than gold, or the other hypothesis of why gold is dropping while Bitcoin is rising, is the fact that now investors are understanding that gold is no longer the status quo of store of value, and they are trying to sell their gold and switch to the digital format of store of value. And Bitcoin is a form of store of value, and it's like a digital gold. So that's why Bitcoin is rising and gold is not rising but still dropping for the past few days, as you can see in gold's graph. What do you think when the supply of something is limited? What do you think? Actually, the thing that happens is that the value of that thing becomes high, or the demand for that asset which is scarce becomes high. The same is what happens in Bitcoin. Bitcoin has a fixed number of Bitcoins that can be in circulation or being mined. When created, it was created with a fixed amount of 21 million. So there are only 21 millions, or we can say that the maximum and the total amount of Bitcoins that can ever exist is 21 million. Imagine. So the already mined Bitcoins are 18.6 million. So it means that around 2.3 5 million bitcoins are left to be mined. However, you can always buy bitcoins from existing users or exchanges. So the fact that it has a fixed amount of possible mined bitcoin, that makes the demand so high. And actually, there are very little amount of bitcoins in circulation. The number, this number of 18.65 million bitcoins that are in existence right now changes about every 10 minutes when new blocks are being mined. Right now, each new block adds like around 6.25 bitcoins into circulation, and the mineable bitcoins is 900 per day. That's the average statistics. Since we have 18.5 million bitcoin in existence, it means that the 2.35 million mineable bitcoins are scarce. So the value of bitcoin is advantageous on the fact that its demand is high and its supply is very low. Though it is impossible to figure out how the value of bitcoin might reach, but it's apparent that we are also happening to have less and less bitcoins, because when you buy bitcoins and lose the keys, what happens? That bitcoin can never be captured again. It's like when you buy something, you lock it on the box, and then you lost the key to the box. There's nobody who will ever access that value, that thing that you have stored in the box. It will be permanently locked. That's the truth about Bitcoin. So any lost Bitcoin, you cannot know if it's in the blockchain, because the way it's stored on the blockchain, it signifies that it is existing somewhere, though somebody can never access it. That fact that people can lose also Bitcoin means that the value of Bitcoin that can be in circulation is also low. But still, remember, this is a very valuable asset, and you should treat it the way you treat like money. When you buy it, store the keys very securely, but never store them electronically. Print somewhere, or store some, or cram that seed, and once again you will be able to access your bitcoins to sell them and get the fiat money. I remember there was somebody who accidentally threw away 127 million in Bitcoin, and officials wouldn't allow such. He had lost his Bitcoins in a dump site few years ago, and he couldn't be able to access that hard drive that was containing the seed. So it's very important to store your Bitcoin safely, and you will not be able to lose it like this man. Even if he was trying to access the dump site, the local authorities in the US wouldn't allow him to do that, and that's how he lost his coins. Anyway, the big advantage of Bitcoin is that it's in limited numbers. It's not like gold. When gold demand increases, what do the miners do? They do this. They increase more resources to mining, and they increase their mining power. So they mine more and more gold. The same happens to silver. And what does that mean? It means that there will be always some new gold in supply, or silver, through the mining. We can never exhaust all the mining, all the gold in earth. So gold has no limitations in supply, and that's why it becomes less disadvantageous in terms of demand, and that's why Bitcoin is more preferred. Also, Bitcoin is easy to transfer than physical gold. When you purchase physical gold, you must go with it, you must travel with it, and keeping a management of those physical gold it becomes difficult, or else you put it in the bank, or you buy digital in a form of digital gold. But still, the funny thing about gold is being manipulated. Its value is being manipulated, and currently it's reducing value. So Bitcoin is more advantageous than that. And Bitcoin is easy to go with it. You can transfer it. You can transfer it from here to US without the exchanges, without the intermediaries, the banks. You can transfer directly to another person. That's another thing why it's also advantageous. One of the main factors which is very positive for Bitcoin is that there are stimulus checks which are released in the US, and these stimulus checks are intended to help people to sustain the COVID economic impact, and also stimulate spending, which is resourceful for increasing inflation, as I will discuss in the next slides. And the Fed is targeting 2% inflation, so they are printing more money, and I think this is one of the reasons why we have this stimulus check. If you may ask yourself, where does this stimulus check money coming from? Where does the government find this money to pay people without working? It's a stimulus check is like people are given just free money. I think one of the most probable things is about more money being printed to stimulate spending, and that's what has been conducted today. Anyway, since the coronavirus, the first stimulus check happened in April 11, 2020, and when I observe my chart, Bitcoin resulted to a 50% increase within just 3 weeks after the stimulus check announcement. And also there in December 29, 2020, there was also a 50% increase in Bitcoin value within a week. So as they print more money, more people are hedging against it by buying more Bitcoin. They fear about the impact of inflation. And right now there is a current bill that is already being signed by Joe Biden, and through the weekend we'll see the Americans receiving this stimulus check, and the news has just been released that 1.9 trillion COVID relief bill will be passed, and people will now receive a stimulus check. So in the recent coming days, we may see a very tremendous shoot of Bitcoin to the moon, and there is more potential growth due to the past results of the stimulus check release. And that's how I see about the positive impact of stimulus check happening right now. Where do you think that this stimulus check comes from, and why do they? Why does the U.S. government have lots of money to do this? One of the things they are doing is printing more money. This is a way that the governments usually do in an effort to try and help people to try and incentivize spending, so that the crisis of COVID is not much impactful. And this is what the government is doing, and it's very addicted to printing more money. And what does this do? It reduces the purchasing power of money. Those who are saving money, they are really being affected by this, because the purchasing power of their money decreases over time. And intelligent investors are investing in those assets that are that retain the value or the monetary energy, and Bitcoin is one of those assets that can be used as a hedge against the depreciating value of dollar. One of the motivating factors about the adoption of Bitcoin is that people are trying to avoid inflation, and they are understanding that there is a very big economic crisis that may happen. When when I think about inflation and deflation, I think the simplest way to talk about inflation and deflation is to use the analogy of a balloon. You can imagine the economy as being a very big balloon, and in March last year, we had a big shock that put a tear on the balloon. People are not spending money because they were stuck inside. You remember the coronavirus. So naturally, the balloon begins to deflate. And the Federal Reserve, the Fed government, the Congress, policymakers, and all governments were trying to pump air into the balloon. But why? Well, central banks traditionally follow the Keynesian economic principle, which says spending is the holy grail of economy growing, and that everyone should strive for. And inflation and incentivized spending it's motivated because your money in future worth less than what is now, and you are incentivized to spend than save. On the other hand, deflation to them means that our debt over years becomes unmanageable, and a vicious cycle of deleveraging occurs. So they do everything they can to pump back air in the balloon, in the economy. Hence the stimulating money policy, low interest rates, and other policies that they are doing to help in this inflation state. So what comes next? What are the risks? Are we likely to see a rampant inflation? This can be a very complicated question or answer, and I think there are three possible outcomes. If you put simply deflation as just a means that the purchasing power of your money is increasing over time, and inflation is the opposite of deflation, which means that the purchasing power of your money decreases over time. And there is another factor of stagflation, which is a unique one, and it is the environment where you have inflation alongside high unemployment and lack of wage growth. So these are the three possible outcomes. But now the risk is about inflation, and that's the biggest Fed's fear. So the risk today is much more about deflation and inflation environments, where we have the banks are very and actually they are tightening lending standards and not loosening them. So if deflation is completely intolerable, and for the government, for the U.S. Congress and the Fed Reserve, they will do more and more to avoid it. They will pump more and more air into the balloon, which, if unchecked, could flip you to an environment of high inflation very quickly. If you remain in the environment of record-breaking deficit spending alongside zero interest rates, well, it is certainly that one possible thing that may happen is we can see the world of rising inflation and high unemployment, like the stagnation that affected the US in the 1970s when the oil crisis was happening. Anyway, with the past announcement of a shifted policy, they would wait to see inflation rather than preemptive actions to stabilize the economy. You know, the governments now are intelligent. They know if inflation is exceeding, it can be dangerous, and so the U.S. government has been targeting around 2% inflation rate over time. So the fear is what will happen when we see the environment where inflation far exceeds that amount. And when that case happens, you start to see the inflation where you hear about hyperinflation. Like in Germany, immediately after World War, there was high inflation. And there are other countries that have been very impacted by inflation, countries like Zimbabwe or Venezuela. Anyway, the risk of inflation is in US is actually very low, and unlike in Kenya, US is the global reserve currency, and the US dollar is the global reserve currency. So the risk of inflation is quite muted. That's how I can explain about inflation. Anyway, I think we cannot always trust the government, and I have these questions of trusting the central banks, the Federal Reserve, the policymakers on controlling inflation. Can we just trust the government will do the best to manage inflation? And that's a question which I've been asking over time, and I just felt that converting my money from fiat currency to Bitcoin would be a good thing in an effort of trying to preserve the monetary energy and to avoid the impact of inflation. It's just a store of value of wealth. One of the things that makes Bitcoin very valuable is that there is the institutional support. Big companies are trying to buy Bitcoin. They are hedging against the inflation. You know, the world reserve currency, that is the US dollar, has been losing its purchasing power, especially due to the current thing about the stimulus check and printing more money. So institutional and big companies are trying to understand that they have to do something. They have to hedge against inflation and depreciating currency. And one of the ways that they have found is that they can incorporate Bitcoin into their balance sheet. That is the money they use to support their company. Part of it they put in form of Bitcoin. Let's say 1% of their balance sheet, they put it in Bitcoin, so that it can reduce the impact of inflation on their wealth. So we see companies like Tesla, which is held by the richest man in the world, Elon Musk. Particularly, Elon Musk has invested in Bitcoin, has bought some Bitcoins, almost 1.5 billion. He did it this year, and that was a good fundamental news for integrating Bitcoin. We also have payments platform like Visa credit card company, PayPal, Cash App, and Skrill. They are also integrating Bitcoin, where they allow buying and selling of Bitcoins, and they are taking chance to accommodate this new technology, the digital currency. They are accommodating it through incorporating Bitcoin in their systems. Since this particular company, MicroStrategy, which had invested more than I think 2 billion, they have shifted their balance sheet to a treasury reserve that contains Bitcoin, and more companies are still coming up and following the lead. And by December last year, more than 42 companies had held more than 65 billion worth of Bitcoin, and they are increasing each day and adding more of the Bitcoin. So it's a new technology which it's promising, and if you see institutional support, it means that this thing is very promising, and it's going to appreciate in value. So Visa reveals Bitcoin and crypto banking roadmap amid race to reach network of 70 million. This is a list of some of the 42 companies and many other companies that have included Bitcoin in their balance sheet. We have MicroStrategy, we have Tesla, Galaxy Digital Holdings, Square Inc., and many others, Marathon, Patent Group, and many other companies, they have incorporated Bitcoin in their balance sheet. For example, MicroStrategy has been accumulating since last year, and they have been accumulating Bitcoin, and now they are holding more than the money they used to do that purchases was around 2 billion, and the today's value of that Bitcoin, they bought 90,859 Bitcoin accumulatively, and the today value is 4.4 billion. We also have Tesla, which bought its Bitcoin January 8th. I remember Elon Musk announcing that investment of 1.5 billion following MicroStrategy, and today's value is 2.5 billion. Actually, if you can look closely to the amount of return that Tesla has achieved due to its investment of 1.5 billion only by January, it is more than 30% of the sales that they made by 2020. Can you imagine? Within just a few weeks, they have already made 30% more than the sales that they made by cars 2020, and they are announcing to accept Bitcoin payment for the purchase of their product, the cars. And you have also the JP Morgan, which is the biggest bank in the world, which predicts that the value of Bitcoin would reach more than 146,000 in the long term, and they say that it competes against gold as an alternative currency. And I can remember JP Morgan has been very negative on Bitcoin. Sometimes back in 2017, its CEO Jamie Dimon claimed that Bitcoin can be, it's a bit of a fraud, but now he's supporting. He's saying that institutional investors are starting to take note of the cryptocurrency, and now they are treating a case for the price of Bitcoin hitting around $146,000. And you can see they are starting to become more positive. You know, when the internet was coming, people would say that it's a bubble. The .com, you remember the .com bubble? The people were seeing the internet. You know, people have problems with accepting new technology, but as soon as they now adapt, they have positive prospect about it, and that's why JP Morgan is now being very positive on Bitcoin and supporting it. We have also another company called Massachusetts Mutual, which is a recent company that has involved in Bitcoin and has unveiled around a news of around 100 million investment in Bitcoin. Among all the institutional investors that have put money into Bitcoin, this Massachusetts Mutual is a special case for a couple of reasons. First, this company usually involves in investments that are very secure, that are high. We can say that they are tried and tested financial products, or those investments that are very secure. But the CEO of the company had announced that they are trying to include Bitcoin in their investment portfolio, and they are now seeking to incorporate Bitcoin apart from their investment grade fixed income instruments like equities, real estate, you know, like that. So it's very interesting that the Mass Mutual purchase of Bitcoin, which marks an entry of a prudent investor into a market that is infamous because of its volatility. So it's been a promising fundamental news about the involvement of the company. We have Visa, which reveals that Bitcoin and crypto banking roadmap amid race to reach network of 70 million. So Visa is another company, a payment company that has been partnering with cryptocurrency platforms to incorporate Bitcoin into its system. And the credit company has announced its plans to help banks roll out Bitcoin so that it's easy to buy and sell Bitcoin through the Visa crypto software, which they are planning to launch this year. So it's something that is being incorporated by even these money companies, the third parties companies. We have also PayPal, which has entered the cryptocurrency market, and allowing its customers to buy and sell bitcoins through their platforms. The way we do exchanges of US dollars, Canadian dollars, and many other currencies. Now let me discuss on the risk associated with Bitcoin. One of the risks about Bitcoin is that it's possible to lose all the Bitcoin and you can never recover it. And it's just like money. When you lose a coin, sometimes you fail to find where it went and you lose that coin. I remember when I was a kid, I used to save money, 20 shillings, maybe when I'm given. When I was in class 1, I used to save like 10 shillings. I spent 10, I saved 10. So one day I came to the shamba where I was placing my savings on a box, and I came to realize that it wasn't there anymore. Maybe somebody stole it, and I lost it. So the same case applies to Bitcoin. Also, Bitcoin, when you open a wallet, you store the seeds. The seeds are like the password. So when you lost those seeds, you can never access your Bitcoins anymore. I remember in 2016, I bought some Bitcoins of $400, and I spent, after a couple of days or weeks, I spent part of the Bitcoins, and the rest I stored, but I lost the keys. So unfortunately, I can never access those Bitcoins till today. And if I was able to wait till now, I would have like around 1.7 million there, Kenya shillings. But anyway, that's the risk part of Bitcoin. When you don't store your seeds properly, you're gonna lose all the Bitcoins. I remember there is another story of a UK man who had 7,500 Bitcoins, which at today's price would be worth around 280 million. The person says that the only way to regain access to it would be through the hard drive that he threw in the trash 8 years ago. But he needs permission from the local authorities. So he cannot access the garbage dump where he believed the lost hardware was. Even though he had offered to donate around 25% of the recovered Bitcoin in case they found that hardware. Unfortunately, the local authorities declined the offer because of environmental issues concerning trying to dig out the dumping site. So the person had lost that amount of Bitcoin, which would be worth 280 million US dollars. So that's the risk about Bitcoin. When you create a wallet, there is a seed you are given, and this is a cold storage wallet I have just created right now, but it doesn't have anything. So when I create this wallet, I'm given the seed. This seed, I'm supposed to store it on a paper and make sure that I don't share it, and I have it secretly stored. So whenever I lost my device or whenever I uninstall this application, the next time I'm going to recover using my seeds. And as you can see, the warnings: never disclose your seed, never type it on a website, do not store it electronically. Those are the ways you can mitigate that risk. Another risk about Bitcoin is that it's very volatile, and the value of Bitcoin versus US dollar can fluctuate hugely. And if you look at its value, currently it can be like 30% appreciating, and the next moment, maybe after maybe 1 month or 3 days, it can reduce by 30%. But the good thing is about overall in the long term it appreciates positively. And the other thing about volatility is that a very volatile asset cannot be used as a currency. Though the intention of Bitcoin was first initially as a currency, but it's revolving to a stock of value. It's revolving to a digital gold. It's not much convenience to be used as a currency because of the volatility. The exchange of value can change hugely over a small period of time. But it requires a long time speculation. You need to invest your Bitcoin. You buy it right now maybe, and then you sell it after maybe 2 years or 1 year or even 5 years. Like me, I say that I will hold like in 4 years time, and I just ignore the volatility that happens on a daily basis. For example, if you look at the daily chart of Bitcoin versus US dollar, the exchange, you can see this is the period of Corona, and this is where I bought my Bitcoin at this price of $9,300. And over time, you can see it is fluctuating. It's coming up, then down, and but overall, it goes up. It goes, depreciates, and then goes up again, and then depreciates. Like in this case, it had a pullback of around 27 to 30%. So it was volatile during this period, and but overall after that it was breaking out. Here is when Elon Musk bought, and that was a spike in the currency. And you can see also the volatility here. It dropped by how many percent? It dropped by 25%. So that volatility in the market, it's one of the risk factors. If you are not a good and patient investor, you can, for instance, buy here, then you see a 20% loss. You start to panic. When you see a 20% decrease in value, you start to panic. So you sell at this point. What do? You are making a loss. But an intelligent investor, if you are even buy right now at this point, but it drops another maybe 50%, will you be able to accommodate that impact in your psychology? That's the thing about volatility. If you are not ready, if you cannot hold your maybe your investment bladder, you may sell your Bitcoin at a loss. You may sell your Bitcoin at a very low price, and yet you can find that the market may move downwards, pull back, a small pullback, then comes and then forms a big pullback. Like in this region, I remember telling my friend this region when there was a big pullback. Technically this was a trend line, and once it broke, I told the person that it would go up, then down, then it will go up. So you don't have to panic. You just buy at this region, and then it will spike up. But another person who may view it as a further drop. So a person who is not patient can sell due to the volatility. But if you look at the monthly chart, you can see overall it's going on an upward trend, and this is the region where I bought my Bitcoin, this region. And you can see on the monthly chart, overall it's an uptrend without any pullback on the monthly chart. It's like what I did, I invested my money and just forget about it. It's about long-term goals, and if you look at it that way, you will see in 4 years, in 2 years, or even 10 years, you will ignore the volatility, but still the volatility can be a very huge risk. Imagine that at this point, if it drops by around even 50% pullback, but it's impossible right now. There are very big institutional role playing out, and we can't see that big pullback. It may be like 30% decrease at the current price. And the good thing about ignoring the volatility is just looking at the long term. You avoid the daily. the daily volatility, the daily drops and rise in the market. Just for you buy and forget, you keep it for a long period of time. That's one of the risks anyway for any investor. Volatility can also be non-favorable. Regulation is one of the risks of Bitcoin, and governments are taking concerns about this new technology. You know, the adoption of any technology brings the attention of the government, and the way Bitcoin is built it's built in such a way that it avoids the intermediary, the regulations, the banks, approvals, all other factors that come in the intermediary. So there are governments in the world that they are trying to regulate, looking forward on regulating Bitcoin and other cryptocurrencies. And one of the countries that feared that the Bitcoin would be a threat to their currency, their fiat currency, because people shift on that digital currency which is unregulated, and that's why they are trying to regulate. But still, there are countries like India. They are banning the use of Bitcoin. They are banning the purchase of Bitcoin in their country, and instead of adopting and assimilating this technology, they are fighting against it, of which they become the biggest losers, because countries like Germany are declaring that Bitcoin can be used as a substitute of currency, and these countries like India, they will miss out a very big opportunity, a very big generational opportunity. And these things like cryptocurrency and bitcoins are helping people in very disadvantageous countries like Venezuela. They can protect themselves from the high inflation that happens in their country, and like in Nigeria, its central bank has been devaluing its currency, and by like 24% by last year, and there are fears that it will continue this way to as much as 10% more in this year. So people are most likely to lose their monetary energy. And in Kenya, the dollar has been, the exchange rate of Kenya shillings to dollar has been increasing over time, and if people can see the value of cryptocurrencies and Bitcoin, they can be able to invest in Bitcoin. Though now in like UK, it has raised the attention of the government, and they are trying to, instead of regulating it, they are trying to ban it, but it can't happen. It's in fact the funny thing about banning Bitcoin in a country is that it becomes even more premium. It becomes even more precious to people. For example, the way we are buying Bitcoin universally right now, those few people in Nigeria, its value is even extremely high in Nigeria, so that people in Nigeria buy at a very higher price, at a very premium price, and there's a sign of how banning Bitcoin in a country would result. It becomes even more precious to people, and people try to value something which is scarce as very precious. Anyway, it's just about the status quo, the changing of status quos, and the shift from the baby boomers to the millennials. And this form, it's just a small hindrance, but it can be a huge risk if big regulations happen. We don't know about the future. We don't know about what may happen, but I think this regulation cannot be a very huge risk, because even as more they regulate, more investors find it even better, because let's give an example. The Wall Street companies, the hedge funds, they love regulation. They love those assets which are regulated. So even if they become more regulated, institutional traders wouldn't feel it as a big impact, but they will accommodate that regulation. They love regulation. They love the government being involved. but still remember the nature of Bitcoin is being autonomous. So regulating it wouldn't be possible into much details, but that's currently what's happening. Even the exchanges, those who exchange where you sell or buy Bitcoins, you have to provide your identity. So before you buy or sell Bitcoin, you must reveal your identity, and that's part of regulation. That's a part of a normal regulation. But when you transfer that Bitcoin from your exchanger to your wallet, it takes another step where your anonymity remains and is retained. So regulation can be a risk, but also can be a positive thing. But we don't know about the future. I've come to the end of my presentation, and I will leave you with the last quote from Warren Buffett. He said, "If you are not willing to own a stock for 10 years, do not even think about owning it for 10 minutes." That's a very wise saying for the investors, and it comes from one of the biggest investors in the history. If you can use the same quote in Bitcoin, I can say that one should buy Bitcoin and hold. Simple. Just buy and hold it, and take it for the long-term goal, like in 3 years, 4 years, 1 year, and much more time frame. The longer the time frame, the more the apparent expectation will be. And another person said the best time to plant a tree was 20 years ago, and the second best time is now. So if one just utilizes the opportunity and buy it right now, it can still appreciate in value, or you can just wait for it to decrease in value, then buy at the bottom and then wait for the price to appreciate. You buy cheap and sell high. So that's another strategy you can use. And I'll just I'll end by saying that I'm not a financial advisor, and I'm not any registered financial expert, but this is just my opinion, and just to say that invest what you are ready to lose. That's one of the basic principles of investing. And I'm not affiliated to Bitcoin, though I have purchased Bitcoins, but I'm not affiliated to any group or Bitcoin, so I don't expect any value from you, or I can say I'm not benefiting if you buy or you do not buy Bitcoin. I don't benefit. I'm just sharing idea to my friends, and this can be a good advantage for you. And I say thank you. In the next video, I will demonstrate on how to purchase Bitcoins, both in Kenya and internationally, how to buy, store in your wallet. For example, I have stored my Bitcoin on my wallet, and I kept the seed. And after purchasing from the exchanges, you transfer it into a local wallet, which you will create a cold storage, and then you hold it. You hold it for a very long time. When you want to sell your Bitcoin, then you transfer them to an exchanger. Then from the exchanger, you can convert that, you can sell your Bitcoin, and then you get the money. You can use P2P, you can use business exchanges, and then you convert your Bitcoin to fiat currency. Thank you.